There's a war going on, a pretty big one when it comes to the impact of the world, and yet markets are booming. How does that make sense? There's a war going on, and it is impacting the logistics of energy globally, and yet gold and silver are dropping as of this week. How does that make sense? I get asked this a lot lately, and I'm not a financial advisor. I'm a guy sipping on coffee, probably just like you, who just sees a lot of dots that eventually make a picture. So people look at the news like this, headlines about conflict, which in this case it talks about Cuba not having energy, and that might be our next little incursion in the United States. We'll see. But they see these headlines about conflicts. They see footage of the Strait of Hormuz, the tensions when they look at their 401ks, and they see that we're actually doing okay, which is weird. I would say we're doing better than okay. Our markets are booming, and we're going to look at that in a second, those charts. But it feels a little bit wrong, doesn't it? Like the world is on fire, but the stock market is throwing a garden party. But if you look at history, and you don't have to look from data this week, there is a little bit of logic to the madness. According to LPL Financial, the stock market has a long history of looking past the first shots fired. Since World War II, the S&P 500 has, on average, actually risen during periods of geopolitical conflict. Why? Well, because according to Goldman Sachs, asset management markets don't trade on peace. They trade on certainty, something they know. Last month, the uncertainty seemed to be the killer. Nobody knew if oil routes would stay closed forever, but this week, according to Reuters, we saw the certainty of diplomacy taking root. The market isn't cheering for a war. It's exhaling because it finally sees a map of how conflict might end. According to FactSet, another reason for the surge is something called earnings resilience. Even with geopolitical noise, 78% roughly of S&P 500 companies beat their profit estimates this quarter. That's crazy. To a guy in a suit on Wall Street, a company that can make money while the world is a messy place is a company likely worth buying into. Now let's talk about the safe havens. According to Kitco Metals, gold is holding near $4,500 and silver has taken a dip. They were at almost $90 this week, and here we are sitting at mid to high 70s. Usually when stocks go up, metals go down, but right now, according to Bank of America, we're seeing a dual track market. Investors are buying stocks because they don't want to miss out on the AI boom, which according to Forbes is expected to add trillions to the global economy by 2030. But according to the World Gold Council, central banks are still buying gold at record paces as a hedge against the US dollar's debt. And we'll look at that in a second. But why are markets soaring during a war? According to Morgan Stanley, it's because the fear of missing out on the next tech revolution is currently stronger than the fear of a headline. The market is betting that human innovation, the stuff that builds computers, medicine, and green energy, is more permanent than the temporary friction of borders. Is that a reasonable conclusion? According to JP Morgan, gold and silver aren't likely to crash even if the war ends tomorrow. Why? Because the debt that's funding the world right now isn't going anywhere. We're in a world where you need an engine of stocks to grow, but you need an anchor of silver and gold to stay grounded. It's an odd and strange balance, it is to me at least, but as long as we keep building and we keep talking, the market finds a way to climb that wall of worry. But what do I know? I'm just a guy with a coffee mug trying to make sense of the ticker, which we're going to get to right now. By the way, the markets have dipped. I know I'm going to be probably going to my local coin shop today and getting into some silver. If that's something that you are going to do and you want to help this channel at the same time, go ahead and think about using this link right here. It is not going to cost you a dime, but it sends you to APMEX and they will pay me for sending you to them. So that being said, if that's something that interests you, I know they had some at-spot deals this week. I don't know if they're still running, but maybe that's something that interests you. But let's go ahead and look at what these markets did. Take a look here. Dow Jones Industrial, 49,526. That is down 537 points there, but that is 1%. We see it right there, little 1% drop, but look at that trend. Isn't that crazy? We're sitting in a war, and that is just a mountain. And the all-time high happened, by the way, not too long ago, a couple months ago in February. We go to the S&P, a little bit different story. We have 7,408, down 92 points here, 1.24%, but the all-time high was this week. So it just came right off of its all-time high, which you see at that peak right there. A much steeper cliff in the S&P 500. Those are the 500 top companies traded on the United States market. We have NASDAQ Composite, of course, 26,255, down 410, or 1.5%, which normally down 1.5%. That tells a story, but we're still sitting at an all-time high here on the 14th. So it just came right down off the 14th, which just 2 days ago. So really, really solid, even though it does show a 1% dip. But look at this globally. Everything is down 1 to 2%. We have, except for Norway. Norway's an odd duck, but it does make sense. Norway has both energy with oil, but they also are probably one of the biggest, especially per capita, when it comes to shipping around the world. Those big giant boats, a lot of them come from Norway. So here we have basically everybody in the red, which is not so crazy, seeing as we're in the red. South Korea over here, don't know what happened there, negative 6%. But that is the story there. And looky here, another reason why we haven't seen gold and silver take off. Wall Street Journal's dollar index. It's this blue line. Notice the yen kind of tapering off here. These are the three biggest currencies. The dollar, and if we were to go back this way, it was actually fairly low. But that dollar is becoming a bit more stable and strong and has risen, if this chart was going further, risen a bit, closing the ties with the euro, which is very, very interesting because with all of this, it would seem, though inflation is still at the front of mind of all of us, I know it is for me, that though with inflation, the dollar is also getting stronger. But is it getting stronger at the rate of inflation? Probably not. So that being said, what did gold and silver do this week? Well, if you saw what I saw, we saw highs where silver was at $89, which is pretty solid growth over last week. So $89, but it ended at $72.72, which is going to be a loss of 4.62% this week, roughly $3.75, which is not too crazy. But year to date, they're still up. Silver is still up 6.4% or $4.44. So that being said, there's still some good in silver for sure. When we look at gold, we see gold ended $4,555, also down 3.39%, $159. But year to date, once again, gold's up 5%, $222. So what we see is a very, very parallel movement this week, both at the year to date and with the weekly movement between gold and silver, which is something I haven't seen in a while. That's a pretty cool thing. So markets, though they were down 1% on closing, have done amazing this week. And we have gold and silver kind of holding firm, and that's because, yes, Wednesday, I think it shot up, but it has come right back down here recently. That being said, thank you so much for watching, and as always, please remember to stay classy and current with the culture of currency.